Now, when you get into security tokens and tokenization of real estate, that is a very real thing that is happening today. That's exactly.
And that, I think, really is the biggest impact.
Absolutely.
Especially in the near term, because it adds that extra liquidity value that private equity has not had.
Absolutely.
So now that and I think it's going to get to the point to where you're actually going to have investors highly preferring or maybe discounting non-tokenized securities just for that lack of option.
Yeah, so it's not even discounting non-tokenized securities. Excuse me. What really happens is when a real estate asset is valued on the appraisal, a larger commercial real estate asset, the biggest factor affecting the value of it is the discount on marketability, because it's not an easily tradable asset, right? Just like a capital markets product or a Tesla stock or a Facebook stock or something on those lines. So when you move this non-tradable asset to a semi-public market, that discount on marketability reduces, which means there's a premium that gets added on, or as we at Accrue like to call it, the liquidity premium gets added on, and the true value of the asset gets unlocked. And I know we talked about this last time as well. So this kind of goes into cap rate compression, where smaller investors are willing to take slightly smaller returns because they're getting access to this asset class, but that unlocks that real value. And that's exactly what's going to happen, what you said, that people would really want to get the true value of the asset, and therefore they want to go for tokenized assets versus the non-tokenized assets, as well as they want the liquidity. You know, who doesn't want liquidity? Who wants to wait for 45 days before they sell their house, or 6 months or a year before they sell their commercial building? That's a tough spot to be in.
It seems like that cap rate compression, that's a restricted time window, it's a limited time window, meaning once it happens and we're already in, that's the new normal, then that goes away just because you're all under the same rules now. But that transition potentially puts really good operators that do their job and have good assets and good properties. They stand to win the benefit of being first, but they may have some front end costs. So they are going to be paying for it on the front end, but they may actually get a good windfall.
Yeah, the front end cost is so fractional. What is really important is that they pick the right product for making these changes, right? We were at a conference last week where there's plenty of tokenization companies out there who are working not just in real estate, but also a whole bunch of other private market assets, all good companies. The problem with real estate is real estate has very specific needs. So you can't go to, I don't know, I'm not even going to take a name of any company, but you can go to an XYZ tokenization company and then go to an ATS and then expect that, this is going to provide us the best optimum solution. And then go to maybe AppFolio or Juniper Square or something for your investor management and your reporting and your financial, that's not really solving a problem. You're creating more problems by doing something like that. And that's why we created Accrue, right? We wanted to kind of have a white glove solution where we provided A to Z solution. It's from initial due diligence, tokenization, initial offering, secondary market, investor management, asset management, distributions, reporting, the whole 9 yards, all in one simple solution. And that's why it's very important for asset owners and operators to pick the right solutions, something that will truly remove the hurdles and not bring in more problems and more friction into the transaction.
Because it's already funky as it is now. But as we get along, we're going to have that, those bridges and all that, whether it's in the same platform or we'll have the Zapier type, programs that can bridge between one app to another seamlessly.